Hey everybody, Jake here with Jake Wu Market Research to go over really the end of year video, looking at some of the broad market names as well as Bitcoin and quite a few individual names going into 2024. And just kind of go over the monthly view. If you are looking for more of a detailed view, price levels, all of that, remember I do have my Twitter subscription for $10 a month that I go over, as I mentioned, a lot more in-depth analysis on the written analysis side of things daily as well as on the weekends, looking at the daily and the weekly candles. But for this video, we'll definitely focus on the monthly because we just closed the month and the year, and we'll kind of see what things look like going into the new year. Before I get started, just remember I do have a partnership with Optimus Futures. This is a futures broker that you can actually connect to TradingView. So if you are interested in potentially a new broker on the future side of things, definitely check out Optimus Futures. I have a link in the video description that you can click on and check out more about them. And as I mentioned as well, if you are interested in more in-depth analysis, especially trade ideas with targets and invalidations going into the new year, I did create a Twitter subscriber exclusive video looking at my favorite setups going into 2024, and that video will be out this weekend as well. So definitely click the link in the video description. It will take you straight to the sign up form. It takes probably 30 seconds maybe to get signed up, and it's, as I mentioned, 33 cents a day, and it's directly on Twitter, so you don't have to go to any other websites or anything like that to see the content. It's all directly on Twitter. So let's jump into it. Starting with ES. ES is looking great. I mean, to be honest, I do think in the short term we're a little overextended. You can't really see it that well on the monthly chart. You can see here that we've just had two absolutely ripper months. But the main thing that I want to focus on here is a very similar pattern that the MACD is showing from really back in 2020 going into 2021. So what we had back in June of 2020, we had this MACD cross. So that's what this one represents. So the one at the bottom in the MACD area, as well as the one kind of right here. You can see that the price action in general is very similar, right? We had this move up, and then we kind of stalled out for a couple months. And you can see that's highlighted by number 2, and that was in September and October of 2020. Now, if you look at what we had pretty much from March all the way to July, very similar price action, pretty much just 5 green months in a row. And obviously nothing in the market is going to be exact, but what was interesting was we had a very similar move down even the same time of year, right? We did start a little early with August this time around, where we did have a actually pretty strong August back in 2020. But what's really interesting is notice at this point we did reverse pretty much right when we did back in 2020 in November. Almost the same exact candle with continuation up into December. And notice here that the January candle in January of 2021 was actually red. So, does the market cool off a little bit? Some of these laggard names maybe start taking the lead. There's a lot of names out there right now that are overextended. So it wouldn't shock me at all for the overall markets, ES, NQ, to maybe even be flat for January. Now, don't get that confused with the possible January effect that we will see. And that makes sense, right? The January effect is really focused on stocks that have gotten hit hard into the last couple months of the year because they have tax loss selling. You essentially get artificial selling pressure in the market because people are selling to offset their gains elsewhere. So the January effect isn't really for, names that have already made their move. It's for names that have been beaten down into the last couple months of the year, and that's where we may actually see some alpha going into January versus the markets really just continuing to lift off. I mean, we're pretty overextended. If you look at from the lows that we saw in November to now, we're up 15%. So the market would it would be not a bad thing to have a little bit of a breather here over the next month or two, as some of these names that haven't really made their moves catch up with the overall markets. So all in all, the main thing I wanted to focus on here is really after that January and February in 2021, we had a really strong, pretty much spring into summer into the middle of that year in 2021. So do we have something similar where we kind of flatline here a little bit, maybe over the next couple months, and then we continue up into the summer? if we were to follow the pattern that I just highlighted in 2020 and 2021, that's what you may expect going into that time frame. So the MACD, as I mentioned, the 1 is the cross. The 2 is a little bit of a pullback here. You did not get a downside cross on the MACD, and then you can see the MACD started to diverge from the signal line, showing that the rally really started from there. So same thing, we had the MACD cross shown by 1 here back in June, and then we had the pullback. We did not close below the signal line, so this was really just a bullish kiss, if you want to call it that, and then we bounced off that area, and now we're starting to move higher. So we'll see what happens going into the new year, but we are starting to get to those all-time highs, and that's when we really want to pull out those fib extensions, and that's where we would maybe get some of those longer-term levels to watch, and this would just be the measured move you'd want to use. And if that was the case, 56.15, that would be your 1.618 extension. And remember, when you're at all-time highs, you don't have anything to look at to the left. So pretty much everything is it becomes an extension from a measured move that you're looking at. If you're looking at the daily chart, you may be looking at a little bit of a different measured move versus the monthly, which we're essentially using the measured move from January highs in 2022 to the lows that we saw in October of 2022. And that's the measured move that we would use for that extension. So all in all, let's see what happens going into the month ahead. And I will, as I mentioned, go over more detailed analysis for shorter term targets and potential resistance into the weekend for Twitter subscribers. Going into NQ, things here are looking pretty good. We had all-time highs here. We actually had all-time highs in ES as well, but we didn't close above those previous all-time highs. In this case, we actually had a monthly close above the all-time highs that we saw in November of 2021. And, overall, a pretty strong candle. As I mentioned, I do, see some names that do look a little overextended. Overall, I mean, if you look at the MACD on the Qs, this is really just starting to get going. You can see here that the MACD was way up here back in December, in January, February of 2022. So there is room for the MACD to move up. But remember, this is a monthly setup. Things take time. This doesn't mean that we definitely continue up in January. It would be good to get a breather. You need the market to breathe in order for it to go higher. You need sellers to come in. That means new buyers step in at higher prices, and that essentially resets the market and sets it up for higher moves into the coming months if we did see a little bit of a breather in the next month or two. Crude is, this is interesting. I didn't even see this until today, and all of these charts are the monthly chart, by the way, so just keep that in mind. And what I've done here is I've anchored VWAPs from the October, I'm not sure why I just said October, the January 2020 pivot, as well as the April 2020 absolute just massacre in oil. So what you can see here is we've got these two VWAPs that really are creating a very strong level of support multiple times over the last I'd say a year or so. And so we're right back down to this area after 3 red months in a row. As long as price stays above the bottom VWAP here, which is essentially the January 2020 pivot VWAP, and that's currently right around 65.87. Until we get a monthly close below that, it seems like we're just kind of trading along this VWAP zone, essentially the dollar cost average of oil since the pivot in January 2020 and then that oil crash that we saw from COVID. So, this could be a potential bounce spot. It has been a bounce spot in the past. And so, as I mentioned, as long as price stays above the bottom VWAP, which is that January 2020 pivot at 65.87, this is really just kind of mean reverting back to those VWAPs over the last few years. If we were to continue higher, the previous highs here around anywhere from around 90 all the way up to around 94. And if you wanted to just see that drawn on the chart, it's essentially just taking here to here. And that would be a potential upside target if we did get a bounce here. And we would definitely have to make some pretty big moves for that to happen because we are only at 71.65 a barrel to close out the year, but that would be a potential resistance zone if we did get a big move up in oil. Bitcoin, this has had a really strong year overall. This month still was green. We've had 4 green months in a row, 4 green monthly closes in a row, that is. But remember, Bitcoin does not technically close until Sunday. So I do these videos on Friday. So definitely keep an eye on where this really goes going into the end of the week on Sunday for Bitcoin and crypto in general. But you can see here that we are at this area where it's kind of a confluence of this horizontal and this diagonal zone resistance. So this definitely is an area to watch for potential, maybe a little bit of a reversal here. But at the same time, crypto does have a mind of its own, and you can have technicals sometimes go out the window for Bitcoin, especially when you're in this type of move for Bitcoin with such a strong uptrend that we're seeing. But for now, we are kind of at this diagonal resistance zone. If we did happen to break out, and remember, as we move to the next month into January, this is right here, this is still a kind of X marks the spot where you have confluence of multiple different resistance zones. You've got market participants who are using this diagonal trend zone to look at the resistance, but you also have just price action traders using horizontal levels that are using this pivot back from winter and spring of 2022. That could also be an area of resistance. So if we did break above and close above these levels, that would really trigger multiple different market participants to go in and actually see that there's a breakout. So sometimes when you do get a move above an area that has multiple areas of resistance, i.e. diagonal resistance and horizontal, you actually have more market participants watching that breakout because everybody's watching the same thing. So if we did close above 48,200 on the monthly chart, I think we could really take off going into the year ahead. If we were to get a pullback here, this is just simply looking at the anchored VWAP. The anchored VWAP from this pivot in September of 23 currently is right around 34,381, but this is a very steep VWAP. So going into, if you're watching this video, maybe into next month, we could be in the 36,000 area. So remember, this VWAP is fluid, right? It's not like a static level like these pivots that we saw in 2022, this February, March pivot in April, that is from 45,500 to 48,200. This is constantly changing as price and volume evolve. So right now it's at 34,381, but in 2 or 3 days, it could definitely be higher. It's anytime you have price that's higher than the VWAP, as long as price is trading above the VWAP is going to continue to move up. It's just, that's how averages work. So over time, this VWAP will continue to move up. Then if we did for some reason, or if we did get a close below that VWAP, then the VWAP would start to flatten out because now you have price trading below that average, which would start bringing the average down. So that's kind of how you can use VWAPs. Moving averages work the same exact way as well. Speaking of crypto names, we'll look at Mara real quick. Mara was just a great case study on using very basic horizontal levels, both on the breakout that we saw this month, but as well as resistance, right? So this is just the resistance that we saw in January, February, and March of 2022, actually very similar to that pivot area that we just talked about in Bitcoin. And so this area really was a hard rejection zone right at the bottom of this zone. And what I did was I essentially just took the wick here from January 22, and then I made the width of this zone pretty much just taking it from this wick here and then connecting it to this wick here. And then that creates this overall zone to watch. And so far we've rejected pretty hard on that area. One thing I'll mention with miners, especially Mara, Riot, they do like to dilute. So if you do have a big move up like we've seen, one, you're going to get pullbacks like we saw today. It was down 16%. But if you look at what Mara did on the month, it was up 156%. So when you have moves like that, you're going to have moves in the other direction as people take profits, whatever the case is. Coinbase is another one that had a really strong last 2 months, just incredible moves, a great proxy for Bitcoin. So if you don't necessarily like trading crypto, this was a good name to play that really mimicked the moves that we were seeing in crypto. For now, we are nearing this diagonal resistance zone that pretty much goes all the way up to going into next month all the way up to around 210. And so you do have a gap above, a little higher than that. And this is one that I actually do daily analysis on Coinbase for the Twitter subscribers. So if you do want kind of updated levels to watch above or below, definitely, as I mentioned, check out the Twitter subscription. That's where you're going to get daily updates, price levels to watch, VWAPs, all of that, gaps, all of that. So for now, we're still technically in a downtrend since this IPO happened back in April of 21. But if we did get a monthly close above this resistance zone, that would definitely be something to consider for possibly a bull case testing the previous highs that we saw in the 300s. So for now, we are trading below that diagonal zone. And going into next month, the top of that zone, as I mentioned, is right at 210. So for January, if we get a close above 210 on the monthly chart, that would definitely trigger technically a breakout through this diagonal resistance zone. Going into NVIDIA, this is just looking like it wants to break out so bad. I did draw the ascending triangle on the monthly chart. You can see it actually a little better on the weekly candle. But all in all, you can see this is just looking like it wants a reason to just explode to new all-time highs. So this is one that, we're right at the apex of this ascending triangle. We'll see what happens going into the month ahead. But I do think, maybe it's worth looking at AMD versus NVIDIA, which hasn't made its move. AMD still hasn't hit new all-time highs, and I'll actually touch on that one here in a second. But all in all, this is one that looks like it wants to break out. We'll see. We haven't really moved at all in the last 5 months. We're pretty much just range bound here. So I would say, in general, we're going to get price resolve one way or the other. And as we near kind of the apex and the end of this triangle, I think we'll likely see a big move going into the year ahead. If we close above the previous highs around 505.50, that would definitely trigger a bigger upside move. And those are really when you have to pull the 1.618 extensions out again. And I think the 1.8 extension on this for the measured move is right around 540, if I'm not mistaken. And we can pull that up right here. Oh, it's actually at 570. So if we were to break out, 570 would be your 1.618 extension from the measured move from the highs that we saw in August to the lows that we saw in October. Tesla's definitely looking interesting here. I know a lot of people are getting a little impatient with this one because it has been pretty range bound over the last several months. But what's interesting is we are nearing the apex of this symmetrical triangle here. The symmetrical triangle is a very neutral setup. Until you get a break and close above the top of the symmetrical triangle resistance zone or a break and close below the support zone, it's really a neutral setup. But one thing that you can use is you can use the MACD to potentially get an idea of which way it could break. In this case, we are nearing an upside cross on the MACD as well, as you can see at the bottom of the chart. We did have a little bit of a fake out here back in September where we did actually slightly close above the signal line with the MACD. So that technically was a MACD upside cross, but then we kind of failed and now we're almost flat on both of them. So the MACD line and the signal line are pretty much flat. So for now, the MACD is starting to look constructive again for an upside move, especially as we near the apex of the symmetrical triangle. But until we get a monthly close above this level or below this level, going into January, that would be right around 270 for a breakout above the top of this diagonal trend zone. On the bottom of this support zone, that would be right around 188.50. So keep those two things in mind going into January for a potential monthly close above that resistance or below that support zone that I just went over those prices. Apple's looking a little interesting here, I got to say. We do have quite a ascending wedge forming here. Now, there's still plenty of time for price to trade within this wedge. The apex of this wedge goes all the way to June. So you could technically just chop around into the end of this apex for quite some time. Apple's a tough one for me. I think the market cap of Apple being $3 trillion, it just is, once you get to that big of a market cap, it's really hard for prices to move a lot. And that's what we're seeing here, right? We've hit all-time highs since the all-time highs that we saw in January of 2022. But for the most part, we're just kind of range bound here. We've been trading really within this range of around anywhere from roughly around 150 all the way to around the highs that we saw earlier this year, around 198.25 or so. And so for me, I don't see a lot of edge in Apple right now. I think there's other names that have not made their moves yet. And as I mentioned, I just did go over the top 6 names that I like going into 2024 for Twitter subscribers. And I did a write-up on all 6 of those names, as well as a video that will be released on Saturday, the 30th of December. For now, the top of this ascending wedge resistance zone is right around 204 going into January. That would be a monthly breakout above 204. Going into January, a monthly close below the bottom of this ascending wedge support zone would be right around 169.50. So keep those levels in mind. If I had to take a wild guess, I feel like we're going to just chop around maybe for a couple months here as we near the apex of this ascending wedge. AMD, we mentioned AMD before. If I'm looking at a name that looks a little, I don't want to say better than NVIDIA. I think NVIDIA looks pretty good with that ascending triangle. But AMD has really not even touched the all-time highs that we saw back in December of 2021. So if I were to say, which one has maybe more upside, if we do get an upside push into 2024, I would say AMD's probably got a better chance of outperforming NVIDIA, even though NVIDIA has been outperforming AMD, obviously with the huge moves they saw this year. AMD may take the lead here going into the new year. And the main thing I'd want to see is I'd want to see a monthly close above the all-time highs, which are at 164.46. And then from there, you would have to pull out the 1.618 extensions, and or if you wanted to just simply draw, resistance zone around here. It's a pretty steep resistance zone. Depending on when that would hit, that would be anywhere in the 189.80. Oh, 1 second. Let me fix this up a little bit. Okay. So you can, as I mentioned, you can use the 1.618 extension. In that case, you would take this high to this low. The 1.618 extension would be around 232. Or if you wanted to use the diagonal trend zone going into January, and remember, diagonal trend zones are also fluid in the sense that they're changing each candle, right? So due to the slope of the line, going into January, if we moved, let's just assume that we moved straight up into January. Let's get rid of that. So in that case, we would be, around 200. That's where that resistance zone would be. Now, let's say that price does this, right? It maybe goes like this, just flattens out a little bit, continues up and moves up here. Then all of a sudden, the resistance zone is in the 250s. So just remember that you do have to look at these diagonal zones, both support and resistance, as ever changing. They're not static. They're not horizontal levels. As the slope of the line changes, obviously the steeper the slope of the zone, the bigger the change is going to be each candle. The less slope that you have on any of these zones, the less it's going to change candle over candle. And that goes for any candle. We're on the monthly candle, but you could use this for daily. You could use it for a 1-minute chart. It's all the same theory as whatever time frame you're on. So just keep that in mind when you are looking at trend zones. That is a great way to kind of gauge, going into the next candle. All right, we'll just go to the next candles here, go up. In this case, it would be anywhere from around 190 all the way up to right around 200 into January if we just went straight up, which can't really see that happening, but crazier things have happened. NEO, this is one that has had an absolutely beautiful move this month. Congrats to those that were able to take this idea. I tried to share this publicly, but I also gave subscribers kind of a more detailed analysis on this throughout the move. And this is actually one that I went over in one of my top favorite setups. I went over the targets. I went over the invalidations for this move. For now, the MACD is curling to the upside, barely not crossing here. You have the Williams percent range and the RSI printing positive divergence here. This is definitely a January effect potential play here. you pretty much hit new lows this month before absolutely taking out the entire range of the previous candle from November and a bullish engulfing outside bar. So this is a pretty strong candle. It looks almost identical to the candle that we saw in June. So just keep that in mind that, if we do have a January effect type of move in the markets, names like NEO, which have been beaten down, could be taking the lead as some of these names that are overextended maybe pull back a little bit, like Apple and some of those mega cap names. BLNK, this is another one that I've been sharing quite a bit. Congrats to those that were able to take this idea when I originally came out with it in the low 3s. This went all the way up to the mid 4s earlier in the week. We got a pullback. This is something that I kind of mentioned to subscribers. Hey, when something's up 20% and you're in options, it's a good idea to take advantage of the implied volatility. But actually, the implied volatility on these options are insane going into March, April. And so, that tells me that the market is still implying some type of move to happen. The thing about implied volatility is it tells you that there's an implied move being expected by the market, but it doesn't tell you which direction. So you're going to see implied volatility higher on the contracts above current price and below. So implied volatility really affects all contracts. It's just essentially, it's no different than a stock going into earnings. All of the contracts, depending on if they're puts, calls, whatever, they all go up in value because the premium goes up because the market is just anticipating a big move. So that's what you've kind of seen in the options chain here for Blink over the last week or so. All in all, though, you've got the MACD curling to the upside. You've got the Williams percent range starting to poke up here after divergence played out over the last few months. And then the RSI is oversold. And that's one of the main things I look for is Williams percent range divergence, but the RSI being oversold is really your trigger. So this is, this company is known for diluting. So keep that in mind. If you do have a big move up, possibly to this SR flip zone from 575 to 7, you don't have to get married to this name, right? This is a name that just has a setup. It could be another January effect play going into the beginning of the year. The lower indicators setup is here. The MACD is curling, percent range divergence is playing out as it's starting to poke out of the oversold territory, and the RSI is also starting to slowly. So, as I mentioned, if you don't like volatile names, if you can't stomach 10% moves to the downside and then 20% moves to the upside, this is just a name to avoid. There's plenty of other names out there that don't have this type of volatility. This is definitely a high risk, high reward setup. And if it's something that fits your trading style and your risk tolerance, then do further research on it and see if it's something that would make sense for you. But definitely realize that this name has always been like this. You have big moves, you get big moves down. It's just, it's a very volatile name, and it always has been. So for those that are in this, just keep in mind, that's the personality of this stock. Last name that we'll go over is Baba. This is a little study that I did yesterday, and really interesting stuff. So I did this since January 2017. The first 2 years that this IPO'd, January was a pretty red month, so keep that in mind. I just didn't do the stats on it. But pretty much since January of 17, and if you want to do the stats on it real quick, we can. So essentially what I'm looking at in this study is from the December close, how high did price go after the December close? So I'll explain that here a little more in a second, but essentially what you have to do is you have to measure from the December close in 2014 to the bottom here, you had a 16% move down. So that's your statistic for January of 2015. For January of 2016, we closed here in December and we moved down 19%. So the first 2 years after the IPO, this thing got hammered in January. So just keep that in mind. That was quite a while ago. And overall, the market was not in a great spot during this time either. China had some problems as well. If you remember that from August of 2015, I still remember that flash crash. But if we are looking at January 17 until the current time frame, if you look from the December close, so for example here in In December of 2016, we closed at 87.81. From 87.81 to the highs that we saw in January, this moved up 19%. So in 2017, it moved up 19% from the December close to the highs that we saw in January. 2018 was 19.6. 2019 was 23.8. 2020, this is where you have to kind of understand what we're measuring here. This was a red monthly close. However, from the close in December of 2019 to the highs in January, we did move up right around 9%. Even though we closed red, we did move 9% higher from December's close. So that's kind of the main study here. The average, if you look at all of the last 7 years and average these up together, the average is 20.2% on average upside move from the December close to the January high. This recent January that we just had in 2023, we had a 37.7% move to the upside from the December close. So, this is all statistics, right? This is all just data. Does that mean that we're going to have an exact 20.2% move this January because that's the average over the last 7 years? No, but it also is something to consider. In general, this name has not done that great over the last year. You had some tax loss selling definitely this month as we hit new lows on the year. And so if we were to look at names like Baba, like Baidu, some of these China names that have just gotten absolutely destroyed, these may be names that really kind of take the lead going into the new year as some of these overextended names pull back a little bit and or just kind of chop around. So hopefully this video was helpful for you going into the new year. I hope everyone has a great new year. Definitely remember to check out the Twitter subscription, $10 a month. The link is in the video description. If you have any questions, you can comment on the video. Hope everyone has a great new year, safe new year. Thank you all for the support this year, and especially those customers that have supported the subscription. And once again, remember to check out Optimus Futures if you are interested in the future side of trading going into 2024. Everyone have a great one. Thanks for watching. And if you do like these videos, please remember to like and subscribe.